Right, boys, so we're going to get into the gaps that I'll look for in my trading week now. So these are three different types of gaps. We have new week opening gaps, new day opening gaps, and opening range gaps. So we'll get started off with the new week opening gap. So as we can see on Friday at 4:59, the market will close. So we will mark that price level out that it closes at. And then on Sunday, 6 p.m., we open here. So these two price points are going to be your new week opening gap. So basically for the whole weekend, 4:59 until 6 p.m. the whole weekend, obviously price hasn't been trading during that time. So when we open back at 6 p.m. on Sunday for the week, we will label this as the current new week opening gap high. I'll put that at the top there. I keep the fonts on these relatively small just because obviously I will have 5 of these on my chart at one time, and as well I'll have new day opening gaps and other levels. So just so it doesn't clutter my chart up, I'll put it at in a font of 8 just so I can obviously read it if I zoom in, but it doesn't clutter the chart up too much when they're near each other. I will mark up to 5 of these gaps because so back in price. So the easiest way to do this, if you haven't already, obviously every time there's a new one, I'll mark it up on the 1-minute chart just so it's nice and clean. But if we go further back, I will mark them up on like a 15 or hourly chart, and I will go back a week, so to the 15th, which is here. So you can see the new week opening gap there. And just as an example, I would mark that one there and label that as the date that it formed on. So I wouldn't mark it and put 13th of December because obviously I'll date these so I know which ones are more recent than the others. So for this one, I would put 15th December, new week opening gap, low, just because that's obviously the low as it closed down here. And then what you can do is just control and drag on the drawing and drag that up here because this candle is a down close candle, so it opened at the top there. So you want the opening price on the Sunday and the closing price on the Friday. And then you can just edit that and put new week opening up high instead. And I'll just put that at the top just so it's nice and clear. So these levels I will drag out throughout the next 5 weeks from when they form. And I will use them as kind of dynamic support and resistance throughout the week. Essentially how I'll use it is I'll look for price to treat it as support and resistance when we're going up to it to aid my current narrative. So if I'm wanting to see bullish move and say we have some sell stops near a new week opening gap above it and I want to see those sell stops get swept, I might look for the sell stops to get swept and the new week opening gap to be like tapped into, essentially, just to give like a little bit of a helping hand, like a cherry on top almost, for like, okay, this is definitely a good point for reversal because not only have we gone below some sell stops for the bullish move, we've also gone below sell stops and come into an area of like real support, which is in this case a new week opening gap. Other times I will use them is for targeting purposes. So if you remember the trade I took, or not the trade I took, the trade I showed you the journal of in the last episode, I had a new day opening gap and a new week opening gap marked out in that trade. And obviously if I see a new day opening gap above price and I'm buying and going towards it, if it's in if it's in a premium of the dealing range, like I went over last episode, that will definitely be a partial opportunity for me to at least consider. And yeah, so new week opening gap, I will extend for 5 weeks and then I will just get rid of it. So I used to keep them, but honestly, it just I never end up like actually looking at them. As well, one little tip because I've already got these marked up, I believe, on a separate folder. A little tip for if you think your charts are getting a bit too cluttered up with them, I basically will just have my folder here, so you can just drag them all into a folder, which you make by clicking on a drawing and clicking create group of drawings, then I'll add it into a folder, and then you can just drag all the other drawings into that folder. So as you can see, if I go up onto an hourly chart, I have these past 5 new week opening gaps marked out. And if I want to get rid of them, I can just toggle them off. So it keeps my charts nice and organized. And I'm not having to like squint see the actual price action. So the other version of a new week opening gap, so as I said, new week opening gaps will form Friday to Sunday. So that gap that forms in that time where price hasn't been trading, that's a new week opening gap. A new day opening gap is essentially just a new week opening gap that's formed in the week. So what I mean by that is an example here. In this week, on Thursday, so between Thursday's close at what would have been 4:59 on the 5-minute chart, obviously it says 4:55, and then the opening on Thursday at 6 p.m., there's been an hour where price hasn't been trading here. So in that hour, when we opened, we gapped up. So this becomes the 20th of December because the new week opening, I call it the 20th of December, even though it formed on the 19th, because it formed on the 19th, but the first full day that it will be used will be the 20th, obviously, because it's formed at the end of the 19th. So I want to see them get used basically for 5 days is how I drag them out. You can use them for 5 days. So this formed on the 19th. So then the first day it was fully used would have been the 20th, Friday. So that's day 1. Then Monday, day 2. Tuesday, day 3. Wednesday, day 4. Thursday, day 5. So after that 5th day, I'll then take it off the chart, delete it, whatever. You can do it that way, or you can just extend them until the end of the current trading week and then get rid of them. Really just like personal preference, really. I like to have like 5 on my chart. This is the same as the new week opening gaps, just because I feel it gives me a better, like more information basically. I like to have a lot of information on my charts. But obviously if it's going to clutter your charts up, you don't have to have these levels. And new day opening gaps, I will use the same as new week opening gaps. So like support resistance, wanting to see the come down to them if we are sweeping sell stops and like maybe tap them, or use them as targets if they're in close proximity to a potential partial. Yeah, and just key levels, levels of interest essentially is what I'll just refer to that. So that kind of umbrellas it as like a partial opportunity or somewhere that I want to see it tap into and then reverse from. The other gap I will look at is what's called a opening range gap. So I will have this on my chart as well every day. So if I go back to Friday's trading. Okay, so an opening range gap is essentially the gap that is formed. Obviously, right now, we have no gap here. You're probably thinking, what gap is he on about? If you toggle from electronic trading hours on your trading view tab in the bottom right here to electronic trading hours to regular trading hours, you'll then see this gap. So this is the gap between where we closed for Thursday's trading for the regular trading hours at 4:15, and then where we open at 9:30. So this gap I will also mark out. So where we open at 9:30, since this was a down close candle, I'll mark these out in white as well. These will be narrow white lines so I can see the difference in them. So close there. And then what I'll do for this gap as well is I will measure the midpoint of this gap. So these are all just more levels that I'm watching. These are not you don't have to have these levels on. I just like to have these levels on because, for one, ICT has taught in his most recent mentorship. This isn't like 2022 mentorship stuff. This is further into the mentorships. He has taught that this dashed line, which is the midpoint of the opening range gap, 70% of the time, it will get traded to before 10 a.m. So when we open at 9:30, 70% of the time, this dashed line, the midpoint, will be hit by 10 a.m. So I kind of sometimes will use that as like a straight up bias. If I don't have any other sort of idea, I'll be like, okay, well 9:30 is coming, so I can have that easy bias of midpoint. And also I will have obviously the close. So this would be the opening range gap high. So if I was to mark this out, I would just go like that, opening range gap high, or you can fully type it out, up to you. And then opening range gap CE, which just means consequent encroachment. That's what ICT basically just calls the midpoint of a gap. And then opening range gap low down there. So yeah, that's another gap I'll have on my charts just as a key level of interest, basically specific price levels that I'm looking at for price to react off. You do not need these levels on your charts. I just like having them on my charts because it makes me feel a bit more in tune with the market, I guess. And again, if I was in a long here, there's obviously no setup that I would have taken here. But if I was in a long, midpoint of the gap, if it's in the dealing range again, if it's in the premium, I'll consider taking a partial there. And full closure of the gap, I'll also consider taking a partial there. So it's a lot of levels just for like nice easy partials, and yeah, key levels just to have it on my charts because price will react to them sometimes. But yeah, as far as gaps go, that is all the gaps that I use in my trading. So yeah, in the next episode, I think, well, what are we getting into in the next episode? Okay, so in the next episode, we'll go over risk management. So how much should you be risking on each individual trade, and like mitigating your drawdown, making sure that you're not going to be over trading or blowing any accounts using proper risk management, as well as actual trade management. So basically just when do I move my stop? We've already gone over the partials, so don't need to do that, but a nice, easy stop loss management rule. And yeah, so I'll see you boys in the next episode.